All right, guys, so we got a lot to get into in this video. So let's talk about what it's going to take for PayPal to get up over $100 per share. Now, I'm not talking about a hype run. I'm going to talk about like a Wall Street bet situation or anything like that. I'm talking about putting the actual math about what PayPal has to do in order for us to get back up over that $100 per share mark. So let's dive into that right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. All right, I actually forgot it was a holiday weekend here in the US, so I extended the sale just a couple of days for those of you guys that want to take advantage of it, because after that, the price has to go up in order to accommodate all the things that we've added to the group and that are coming to the group. So check it out. It's the pinned comment down below. Now, let me be very clear and upfront for you guys right now. I do not think that PayPal is going to have a meta style run up where basically it just triples up in like 6 months or so. That right there was kind of a once in a decade type opportunity. But I do believe that PayPal is one of the best opportunities in the market right now. And to be quite honest, I don't need a meta style run up to make a lot of money in the stock. So that's absolutely why I've been buying PayPal so heavy. So what exactly is needed to push PayPal up over $100 per share? Well, I actually broke it down into 3 different ways that PayPal can get there. And the last one is kind of something I've heard nobody talk about, not the bears, nor the bulls, nor anybody else. And to be honest with you guys, it's kind of a pull in case of emergency type scenario. But it absolutely is something that PayPal has at their disposal that not a lot of other companies have at their disposal, so you don't want to miss that one. But let's discuss number 1 first, and that would be that they just maintain their growth that they have right now, which is a slower growth rate, but essentially they maintain that growth rate and they get back up to just a PE of 20. Right now it's trading at a 17, and you can see right there on the chart that that is lower than it has ever traded at in the history of the stock. It has never traded this low before. So to me, getting back up to just 20 is very, very, very reasonable. And more importantly, I don't need it to go up to those higher growth rates in order to get to that $100 mark. I just don't. So I'm not even going to include that. I'm just going to look at it. Hey, we just get right back up to that 20. So basically from a 17 up to a 20, which to me is a very reasonable assumption to make in regards to PayPal. And I also don't need to increase their growth rates either. I mean, I'm looking at revenue basically just continuing to grow at that 7 to 8% clip, and the EPS continuing to grow at that 14 to 15% clip that it's been growing at for the past few years. So if I kind of take that out over the next 3 years or so, I'm looking at an EPS of $5.57 over that 3-year period. Oh, and 3 years, assuming that the PE ratio does go just up to 20, not crazy, nothing like that, just up to that 20, and we get that EPS number up to that $5.57 per share, that means that PayPal will be trading at $111 per share, which of course is well over the $100 mark. And to be honest with you guys, even if I just leave the PE at 17, all right, fine. You want to say 20 is impossible. Even if the PE is 17, that puts the price up over, I think it's 90 something dollars or so. So you're getting really, really close to that $100 mark, regardless of if I leave it there or if I just give it that bump up to 20. Now, clearly, that's not meta-like returns at all. However, you are beating the S&P if S&P just continues right along with its average. So that's not a terrible investment at all. And I'm not being unreasonable in my assumptions. I mean, I'm just basically built in just a bump up from 17 to 20. That's it. So to me, this is a very reasonable assumption. And in 3 years, if I'm beating the S&P with my investment in PayPal, I can't say that's a terrible investment or anything else like that. Now, I agree, it's not like Meta. It's not like other places where maybe I can get a better return on my money, but I'm still beating the market, which as a long-term buy and hold investor is your goal, is just simply to beat the market. And no, I'm not going to talk about all the people talking about 10x your money in 3 years and all the other ridiculous stuff like that. If you want to go back to 2021, hey, great, go for it. But we all saw exactly what happened in 2022. So I'm not doing that. All we're trying to do is just simply beat the market. And right now I am easily beating the market with that investment in PayPal if those assumptions happen. So the second way they get there is that they actually are able to turn the ship around, which of course means that's going to be the one that you guys like the best. And it absolutely is possible that they do turn this ship around. Now, I'm not going to get crazy with any of my assumptions here because we got to put math to it, right? We can't just say they turn the ship around. We got to put math to it. So for me, I'm going to basically say, hey, the revenue goes up to 13%, which is not unreasonable. It is still historically low for this stock, but it is absolutely feasible if they're able to turn things around. And I'm going to put EPS growth back up to that 20% mark. So that way they're basically growing EPS 20% per year. And that right there would make the earnings per share $6.16 over that same 3-year period. So I'm going to use the same time period we were using before. So over that same 3-year time period, if they're able to grow at those rates, basically averaged over that 3 years, you're looking at $6.16 per EPS. And if I keep that multiple down at that 20, now I honestly think if they are able to turn the ship around, it's easily going to command a 25. And I wouldn't even be surprised by a 30 PE as well. But again, trying to be conservative here, let's say they just get the bump up to 20 or so. That right there means you are sitting on a double up at a minimum. Actually, it's more than a double up of PayPal stock. And if it does command that higher PE ratio at 30, you're sitting on a triple up, which is not out of the realm of possibility. And I'm not being, crazy bullish, anything way out there, being the Tesla bull or anything else like that. And I know we're talking about PayPal here, but you guys know how some of these projections go, especially here on YouTube, where people just kind of get out of control with multiples and a lot of other growth rates and a lot of other things like that. Both of those scenarios, whether it doubles up, more than doubles up, or whether or not we get a triple up, are absolutely in the realm of possibility if they are able to actually turn the ship around. And on to the last one here. And this one right here is the one that I just honestly, I haven't heard it talked about at all. But it's, and maybe I missed it, guys. I don't watch a lot of YouTube, so if I missed it, I apologize. I'm not trying to hate on anybody else or anything else like that, but I just have not heard it discussed at all. So number 3 would be PayPal essentially just utilizes exactly what they already have to grow their share price. So kind of let me explain this here, because I know that would make a lot of sense right there on its, on its face there. So essentially, if PayPal, new CEO, and basically everything flops, nothing works out, they just continue right on as they are right now today, and that's it. They just basically, they can't do anything, right? They're just, nothing works, and it goes nowhere. The reality is over the past 5 years, they have averaged more than $1 billion in free cash flow every quarter over the past 5 years. So it is not unreasonable to think that that right there can continue in the future. So despite this downturn, despite all the negativity around PayPal, they're still pumping out that kind of free cash flow. So this isn't something that I'm hoping happens or anything else. This is proven they're able to do it in this environment during the huge downturn, during, the shutdown, during everything. That right there is what they're able to do. So it's very, very reasonable they continue to do just that into the future, even if nothing else really works out. So they can simply take that free cash flow every quarter and use that to aggressively buy back the stock quarter after quarter after quarter, which of course is going to raise that EPS number because you're essentially taking shares off the market. You're taking them out of the system there, raising that earnings per share that you're getting with the stock. So even if nothing really changes, that earnings per share is going to go up, which even if the multiple doesn't change, so you leave it right there at this, historic low that it's at right now, that right there is how you actually see the share price grow, because that earnings per share is going to go up, pushing the price of the stock up in regards to valuation. That is essentially the safety valve that PayPal has regardless of what happens with this transition. And honestly, guys, it's not a spot that a lot of struggling companies are in. Now, if you're talking about, your Apples and your Googles and companies, okay, fine. You're talking about great companies that aren't struggling. When you're looking at companies that are struggling and really kind of in the doldrums right now and really having problems, they most likely do not have a free cash flow like PayPal has, which means they don't have this option. This option isn't on the table in the first place, which for me is kind of another safety net that allows me to continue to confidently invest in PayPal at these lower levels, because they have that ability, even if everything goes wrong. I don't need, I don't need a hype run. I don't need all these other things to happen, or, hopium, or, even for the new CEO to come in and do great things. If he can just come in and do average things, I'm going to be sitting in a good spot. And oh, by the way, PayPal is already, the board has already authorized buybacks to begin with. And of course, if they want to continue to authorize buybacks and spend the free cash flow that way, they can choose to do that and aggressively do that due to that free cash flow number. But think about this for just a second. What if PayPal does manage to turn the ship around, even if it's, not an incredible, spectacular turnaround, but they're just able to manage to turn the ship around and get it going in the right direction again, and they continue to aggressively buy back? That right there is how you send the stock on a really quick run up, and how you really get some epic gains in the stock. So I don't know, just look out is all I can say if that happens, if they continue to buy back shares aggressively and the new CEO is able to actually turn the ship around and actually get us, moving in the positive direction there. I'm not even talking about crazy positive, just getting us moving in the right direction there. Look out's all I can say. I think I'm going to be a very happy shareholder. And don't forget, the sale ends in a couple days. To learn how to break down a stock just like this, do evaluation, have a plan, be able to set price targets, be able to see my watch list with all the price targets, be able to see every single buy I make on every single stock that I own and are going to own in the future and sell, of course, and you want to be able to jump in with the best 6 and 7 figure Discord out there and have all those folks also helping you, and you want to jump in on our Q&As, slide into my DMs, be able to just talk to me directly, and you want to be able to take advantage of all the exclusive videos that we have covering a number of topics. I put 3, 4, 5 of those a week out just exclusively there in the group. You want to be able to use the stock analyzer tool for free and be able to analyze stocks and not have to pay 30 bucks a month or whatever the heck you got to do with a lot of other folks' stock analyzer tools, and a ton more. Make sure you check out the pinned comment down there because the sale goes away in a couple of days and the price is never going to be this low again. So make sure you check it out and see if it's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.